Hello, everybody, and welcome. This is the Wiley Solution Walkthrough Accounting Tools for Business Decision Making, 8th edition. This is exercise 24-7. This is for standard costing. Textbook authors are Paul Kimmel, Jerry Weingan, and Jill Mitchell. The question used in the presentation is copyright 2022 by John Wiley and Sons. All rights are reserved. This is for educational purposes only. The video may not be distributed or redistributed without the express permission of Wiley. The solution presentation is copyright 2022 by Bennett Tchaikovsky. All rights are reserved. The opinions contained within this presentation are those of Bennett Tchaikovsky and not the authors of the textbook or of Wiley. Let's go ahead and have some fun. All right. So Levine Company, which produces a single product, has prepared the following standard cost sheet for 1 unit of product. We've got direct materials, direct labor. During the month of April, the company manufactures 230 units and incurs the following actual costs. So compute the total price and quantity variance for materials and labor. So let's go ahead, and what I would really encourage you to do, because I'm going to go through this a little bit more quickly, I have videos for exercises 24-5 and 6, where you'll see me go into this a little bit more in depth. But let's go ahead, and for the materials, right, I'm going to take my actual quantity times my actual price. And I'm going to compare this to my standard quantity times the standard price. Okay, so the first thing we want to always go through and do when we're doing these questions is we want to first figure out, well, what is our total materials variance? So our total materials variance is going to be my actual quantity times my actual price minus my standard quantity times my standard price. So my direct materials purchased and used, I use 1,900 pounds at a total price of $5,035. So what does that mean I actually spent per pound? Well, the amount I spent per pound, well, 1,900 times X is equal to 5,035. That means that X is going to need to equal to 5,035 divided by 1,900. So this is 5035 divided by 1,900, or this is going to be $2.65 per pound. Okay. So that is what I actually spent. How much did I really spend? Well, how much should I have spent? Well, it's 8 pounds at $2.50 per pound. So my standard price per pound is going to be $2.50. But I have 8 pounds at $2.50 per pound for 1 unit. So my standard quantity, because I produced 230 units, this is going to be 230 units times 8 pounds. So this is going to be 230 times 8, or 1,840. So over here, my standard quantity times my standard price, so the amount I should have spent on my material should have been 4,600. Now, I know right off the bat, like, let's think about this logically, right? Before we get into anything else, how are we looking? Well, we used more than pounds than we should have, and we paid more per pound than we actually should have. And you know, if things are periods of rising prices like it is right now in 2022, allegedly, then we're in a position where, you know, hey, our prices are going up, so that's not good. And so therefore, we're going to have an unfavorable variance. So our total materials variance is going to be 435, and this is going to be unfavorable. Okay, now to isolate the price and quantity variances, I'm going to take my actual quantity times the standard price. And when I do this, my actual quantity is 1,900. My standard price is $2.50. So this is going to be over here at $47.50. So now by going through and comparing what I actually spent this is going to give me my price, my materials price variance or this is going to be 5035 minus 4750 or 285. And this is going to be unfavorable materials price variance. Why is this going to be unfavorable? Well, I spent 265 per pound. Remember, I'm leaving the AQ constant, focusing on the price. So right over here, I'm spending more per pound than I should have been. So this is going to be unfavorable. One moment. Okay. So now let's go ahead and focus on the quantity variance. Or how much should I have been using? So AQ times SP, I'm comparing the middle value to SQ times SP. Remember, I'm leaving the standard price constant, focusing on the quantity. So this over here is going to be 4750 minus 4600 or 150. I used 1900 pounds. I should have only used 1840. So this is going to be an unfavorable materials quantity variance. Okay, what's the last thing we need to do? We absolutely have to go through and we have to check our work. How do I check my work? I add up these two numbers, has to equal up to the total variance. Okay, so for the labor, and again, I want you to take a look at exercise 24-5 and 24-6. So our labor variances, okay, this is going to be my actual hours times my actual rate, and my standard hours times my standard rate. So that's going to be the first thing that I'm going to go through and do is I want to compute what is my total labor variance. Okay, so over here, so for direct labor, I actually used 700 hours at a total cost of 8,120. So what this means is that my rate, right? So I've got 700 times Y is equal to 8120. So my Y is going to be equal to 8120 divided by 700. Okay, so over here, so this is going to be $11.60 per hour. Okay, so this is, again, this is one of the harder ones you have to figure out, is that they'll oftentimes give you the quantity and the total amount, but they won't give you the price. Okay, and how much, for what are my standards for direct labor? Well, my standards for direct labor are going to be, it's 3 hours at $12 per hour. So I know this is going to be at $12 per hour. Okay, so as I look at this over here, okay, now how many units did I produce? Well, I produced 230 units. So if it's 3 hours per unit, this is going to be 230 units times 3. So 230 units times 3 hours per unit. Okay. So over here, my standard rate times my standard hours is going to be 8,280. So my total labor variance, or my total direct labor variance, is going to be 160. I spent 8,120. I should have spent 8,280. So this is going to be a favorable total direct labor variance. I spent less than what I should have done. Now I'm going to put in my middle value, actual hours, standard rate. So here my actual hours are 700. My standard rate is 12, giving me a total over here of 8,400. So I'm going to isolate this over here. My AH times AR minus my AH times SR, right? I call this my rate or price variance. So this over here is going to be 8,120 minus 8,400. So this is going to be a favorable rate, price, Direct labor variance. Why is it favorable? I only paid $11.60 per hour. I should have paid 12. Remember, we're keeping the hours constant so we can focus on that rate. Now, the next one over here is going to be my efficiency or my quantity variance. So this is going to be my actual hours times the standard rate minus the standard hours times the standard rate. This one here is going to be 8,400 minus 8,280. So because I spent more hours than I actually should have, I spent 700 instead of 690. This is going to be an unfavorable efficiency / quantity direct labor variance. I'm focusing on the hours, right? Because my standard rate is being held constant. So what's my last one thing I want to go through and do? I want to do a total check to make sure that my total variance that I just computed is equal to this over here. So this is how we go through and compute this. And I'm just going to wait one moment here while I check my work. So I'm just going to show you the book solution, or, and it's kind of like what's interesting about this is it's kind of somewhat of like a hybrid in terms of what we just did. But they're just going through and doing the AQ, what we did over here. But this is kind of like where I kind of like to, this is why I like to break it out like this, because I do think it makes a better visual presentation. So, but again, whatever way you choose to kind of go through and handle these questions, that's great. I know that what works for myself in terms of, for myself and my students, tends to be, going through and breaking it out, showing the total variance first. Then once you have the total variance, then you can do the, price quantity for materials, price / rate, quantity / efficiency for direct labor. And then you have those other checks you can do. So I want to thank Wiley for allowing me to use the questions in their textbook. Please don't forget to like and subscribe. If you'd like to see any other solutions, please feel free to ask for them in the comments. Have a great rest of your day.